Let's go to Dom Chu. He has today's ETF Edge. Dom, I'm going to send it over to you with the notion that there's a potential of me taking it back from you if we do get more on this. But for now, please proceed with ETF Edge.
Well, of course, Scott. So we're going to kind of continue that theme with the geopolitical developments happening with the Middle East. How exactly are ETF investors reacting? So joining us now is Matt Bartolini, head of SPDR America's research at State Street Global Advisors. They're the company that runs many of these sector SPDR-based ETFs. Matt, for one of the things that we want to talk about first, we want to know exactly where you are seeing some of the relative activity within the ETF universe with regard to the geopolitical risks that have been mounting and are seemingly coming to a head over the course of the last couple of days.
Yeah, so I think what we've seen heading into this past weekend was a little bit of resiliency being built into portfolios. So you saw allocations into gold, we saw allocations into inflation-linked bonds, but also you saw some resiliency added through energy sector ETFs. Obviously, with the spot price of oil popping as a result of the conflicts in the Middle East, energy sector ETFs have taken about $1.4 billion so far in June as investors start to position for potential rising oil prices, but I think also ongoing oil volatility.
And now also, Matt, outside of the normal defense contractor type trade, gold type trade, treasuries type trade, are there other places that you would expect to see some more relative heat or activity if hypothetically things do escalate in the Middle East, as Scott was just pointing out with regard to some of the headlines coming out of the Middle East right now?
Yeah, I mean, we have seen a lot of inflows into aerospace and defense ETFs just naturally. You know, if there is likely to be sort of escalated conflicts, but also just increasing in defense spending, not only at home in the U.S., but outside the U.S., with Europeans coming to bear with some of their budgets, that increase in defense spending could act as a tailwind to some of those defense stocks. So we have seen roughly about $700 million of inflow so far this month into aerospace and defense ETFs. That's one area. Another is just this sort of continuation of trying to buy sort of large cash flows. And so communication services sector ETFs, where there's a heavy amount of bias towards quality stocks and cash flow generation, have been some areas where investors are trying to sort of ride out this near-term volatility.
All right. Matt Bartolini at State Street, thank you very much for that. We're going to continue this conversation next at etfedge.cnbc.com. Matt will be joined by John Davi, CIO at Astoria Portfolio Advisors. Scott will be watching all of this in the context of the Middle East. I'll send things back over to you.